Shout out to everybody here on the live. Thank you for jumping on in. Back for the second stream of the day. Hope you're having a wonderful time out there in this beautiful world. God bless each and every one of you for being here, sharing your most precious asset with me, and that is your time. Welcome to the Crypto Lifer Show, baby. Hope you're having a good time out there, hanging out. We're about to pop on in. Appreciate each and every one of you for being here with the Lifer, man. And for our second live stream of the day, we keep trucking. No matter what, we keep pushing. And the Fed rate hike comes out. Let's talk about it. Let's break it down. I'm back, baby, back. Back, baby, back with another one. And right now we had a huge pump up, and now we're getting a huge pump down. Looks like it was baked in. They're going after the leverage traders and the 100x leverage. And you can see price action is getting heavily volatile. We're getting a lot of movement. They got us all the way up, possibly to 26,200. They liquidated the shorts. Now they want to liquidate the longs. They're getting greedy here, trying to get every person they can to get slammed.
The Federal Reserve System works every day to support a growing and stable U.S. economy.
This is the Federal Reserve. We're going to watch Jerome Powell when he jumps on in. There's 5,000 people watching that live. We should all be watching this live. But shout out to everybody here. When Jerome Powell speaks, we're going to see what he says, see if he leans in to another rate hike later on. Central banks. Now we're seeing the heavy volatility to the downside. We're going to take a look at Bitcoin on the 30-second chart and kind of see what's happening here. A slam down, which is strange, right? It's almost like they couldn't let it breathe. Bitcoin should get a pump up with the other world markets. Let's take a look at the S&P on the same time frame and see what's going on that 1 minute chart as well, and see if we're kind of struggling right now. We did get a sell-off on that 1 minute into this area, kind of a bear flag too as well. It's interesting. This is supposed to create an amazing thing, but I guess this was baked in. I was asking, I guess a lot of people believe this was baked in. And even though we knew, basically it was a guarantee that it was going to happen, doesn't seem to be kind of doing anything to the markets like we thought it would. So we'll see what happens. We'll break it down. And we are live again, just posting that to the Discord. Fed Decisions live analysis. Hello, lovely people. Shout out to everybody here. Shout out to Jennifer back on. GF Burke back in there. Mar Solo and all of my awesome lifers. I hope it goes to 12K so I can buy. Yikes, 12K. Funny. Greedy guy, huh? You want the whole world to suffer so you can get some low Bitcoin. No, I'm just messing around. But you never know. Could it go to 12K? We shall see. So only time will tell. I highly doubt it will because of the weekly bullish divergence that I've been showing you for a long time. I'm actually about to put 100 grand into Bitcoin, and I'm going to do it 30 grand at a time. Talked about it with my wife. It's what she kind of thought she wanted to do. I said, I'm with it. You know what I mean? I believe it's better than a real estate investment in the next 4 to 5 years, make way more return. So we were looking at real estate, looking at Bitcoin. Want to kind of dabble in a few different things, but I'm willing to put another 100 grand into Bitcoin, gobble up at least, a little under 4 more Bitcoins while you still can. All right. Shout out to GF Burke. Kaz don't care. He says, let's take a look at Casper while we're waiting. One of my favorite tokens to trade. Injector Protocol still looks like it could get a bit of a push to the upside here. It's forming this kind of bullish rectangle flag. This thing could boom. I'm still watching Injective with this kind of cup and a handle. Could see it make a big move to the upside. So, wow, 890 now, the lowest I've seen it all day long. They're slamming the price, even though they come out with the CME watch tool, and we know that we got the rate hike. I mean, it came out, right? No rate hike. Well, it did make me do that before. Why y'all so many people on the site right now? What happened? Why are you doing this to me? Hey, there you go. So 97.7%. And this is basically spot on, right? And current target rate is 50.500 to 525. So we're stuck at the current rate hike. Basically the rate hike should come in at 2 o'clock. You know what I mean? And so the next FOMC meeting is in 41 days. So they came out and they raised the rate. They did not raise the rates. We stayed flat. I don't understand why that's pushing the price of Bitcoin down. It makes no sense. You can see getting a nasty dump out of the symmetrical triangle to the downside, killing the trade from earlier this morning. Took a shot. I do not like trading FOMC days. This is why I didn't risk a lot. I'm down maybe $40, but this is the problem here. Getting slammed. The site is all clogged up. Yeah, too many people on the site all day long, right? So many people are watching this every day. Where I want to see the site should actually show us the official hike though. They should say 100%. It's been done. Called it over and over again. That's what I'm always wondering. But the Fed does not raise rates. It was highly likely that they would not. 25,800. Wow, getting absolutely clobbered now. None of this makes sense to me. Honestly, it doesn't make sense. If the rate stayed the same, why wouldn't risk-on assets go to the upside? They're just going to liquidate all the longs. Anyone that thought they could get long, they want to liquidate you. And these are liquidations happen here on BOOKMAP. BOOKMAP showing live liquidations right now, 23,000, 33,000, 59,000, 89,000. Just an absolute melee, a blast to the downside. This is just absolutely horrible. 2 more rate hikes coming, though. Buy the rumor, sell the news. The site was all clogged up. Fed pauses the rate hike. Yep. Why is it going down? Yeah, so Fed comes and pauses the rate hike, and then Bitcoin getting absolutely slaughtered. Not slaughtered, but pretty nasty dump to the downside here after we waited all day. And right when the rate hike came out, we saw the volatility and the move to the downside. That 30-second chart getting absolutely slammed. Let's see if there's a divergence on the 1 minute. Could we get a move back to the upside? They're trying to push it back up right now with some wicks to the upside. You would assume that this would be a bullish tone for Bitcoin and the rest of the space. Doesn't seem to be following suit. Doesn't seem to be fitting. Pause doesn't mean finish, means pause. And they have already high, so not good news at all. Perfect BTC bounce. Want to see if Bitcoin can get that bounce back to the upside here. We will see. But right now, it is struggling on that 1 minute chart, not even showing signs of like a boost back up, at least trying to get up there. Almost starting to form maybe on the 5 second like a bear flag here inside the smaller time frame. So starting to see some struggling movement here for Bitcoin. 5 second chart is not looking amazing. Looks like more downside here. And we're going to keep the chart open as he speaks. 25,800 back up there, but the struggle continues. They did just fill that big void of liquidity that they wanted to get. There was a big buy zone there. They got in at 25.7. Looks like that was kind of the call for the move. We look at liquidity. We still have this order down here. We could go all the way to 25.2, even 25.300 if this keeps going. So we're going to watch this closely with this idea. We kind of need this double bottom to break back to the upside. Nice double bottom there and a W pattern forming on the 5 second chart. See if we can get back up to the move. Target 5473. We got to get that bounce, baby. Yeah. What meaning? Hawkish pause. DXY caught in a huge candle. Let's wait for what Powell will say. You called 25.2. What's the meaning of the hawkish phrase? We got to get that bounce, baby. Pause doesn't mean finished. Yeah, I agree with that. We'll see what happens, and we'll be open-minded to see what he has to say. 20 minutes until he jumps on to that mic, and usually he's like a minute late too, so we'll see what happens. Follow me on Twitter, @CryptoLifer33. I would greatly appreciate it. We do stream this on Twitter, so you see us streaming every single day. FOMC also on the tweets. Let's just see what people are saying about the FOMC. Whitelist registration for Tether Gold is now live. Wow, airdrop Tether. I think that could be, is that real? I'd be careful if that's even real. Just be careful. I never trust any of this stuff anymore. Fed rate hike, 0% basis points. Full halt. Pause at the FOMC. What we are now on Bitcoin. Where are we now on Bitcoin and crypto? Breaking, U.S. Fed keeps interest rates unchanged at 5.25%. No change. Follow me live for the FOMC. That's what he's doing, right? Everyone is. How the economy works. Raise rates, soft landing, recession, lower rates. Economy is weak. QE, inflation is high. Raise rates, soft landing, recession, lower rates. And it's true. That's pretty well done by the Bitcoin therapist. Breaking, U.S. Federal Reserve has decided to pause the interest rates as per FOMC meeting. Remains at 5.25. Dread Bongo, U.S. Federal Reserve has paused the interest rates. Previous 5.25. New rate, 5.25. Nothing has changed. Good for like people who are basically trying to get into a home. If the interest rates stay the same, it's their mortgage won't go up. That's a pretty good idea too. 20 minutes for the FOMC. Send it. People want to send it. I don't know. I'm open-minded that anything could happen here, and we're going to wait for Jer Powell to jump on in and say what's going down. Shout out to my man Rice TV. I just saw him out of nowhere there. Where was he? Right there with Crypto Blood 17 minutes ago. Dead calm ahead of the FOMC meeting. To pause or not to pause, definitely things coming our way. With the last few FOMC meetings, we saw U.S. markets and Bitcoin dump, then pump the next day. Probably going to happen again today. Do you agree? Interesting. Last few, we saw U.S. markets and Bitcoin dump, and then pump the next day. It's Sure Powell Day. Let's go, right? It is. It's one of those days. Raise cup, not rates. That's funny. Shout out to the Golden Knights for taking the gain. Unbelievable move to the upside there, too, as well. So thank you, FOMC. $200, right? Stay ahead of the game and tune in at 11:30 India time to get the latest insights. Funny. Eggs, $1.18. How is that? The base of deflation in the egg market is telling us the Fed has already hiked too much. They'll be free soon. What? I don't know what she means. They're so expensive where I'm at. They just keep going up and up and up. May I have a glass that makes you feel like drinking this. This market will almost pushes you to, I don't drink at all, and I stayed away, but I'll be honest, this market makes you feel like drinking for sure. It's like constant barrage. It never stops, and it just never ends. Just insanity, absolute insanity. Less than 2 hours left. We will find out major crypto news will be revealed. That's funny, man. So many people kind of using the news to kind of hype up the market. Even me, I'm here doing the thing, but I just like doing this because I want to see what's happening to the market. I'd be doing this anyway. Getting back to 25,007, and we're getting the bounce now back to the upside on the smaller time frame. But again, short-lived, or could we get the move further up? Let's take a look here at what's happening. A bit of a cup and handle. So let's break it down. And what I do here that's different than the other channels is I'm watching price action live while we're watching the Fed. So I'll be actually doing live technical analysis on like a 5-second, 20-second chart, 30-second, just really small charts just to kind of show you how fast the market is reverberating all the movement there. Bit of a cup and handle for that area, but the 5-second chart does need to come on down first on the stochastics. We now have a major resistance on, well, not a major, but, a local resistance in the smaller time frame at about 25,925. We got to break back above that to remain bullish and then kind of remain further up. My little idea here was this is a symmetrical triangle. They break up or down. We're getting wicked back to the upside. We desperately need to break back inside this pattern and then make a move back to the upside. We did have a pump all the way up to about 20,000. How high did we go here on this wick? About 20,104, and then things began to change. The only good thing is we're still kind of holding this bigger level to the upside, and we could bounce back to the upside, but we did lose the symmetrical triangle, clear as day, at 25,870. The trend is your friend. We're not in a friendly trend. Not at all. Not at all. I used to buy cereal at $3.99. Now they're $6 for checks. I can't believe you bought them for $3.99. In Massachusetts, they were always expensive, but now they're even more. Or if you buy the same box for the same price, it's actually a thinner box. There's less money. It's like way thinner than it used to be. Did they raise rates or stay flat? They stayed flat. They did not raise rates. 18K is loading. Wow. You want 18K. Wow. A lot of people wish they could get lower prices because they didn't get in at the right time, and I understand how that works. And honestly, now what this is doing is if we pull this one away here and we just take a look, starting to form that descending triangle on the bigger time frame, right? So can we get the pump back to the upside out of this cup and handle? Usually is the way. A little bit of bullish divergence there. Swing up, swing down on the 5-second chart. It is just 5-second bullish div. It did give us a pump, but we couldn't get back above the previous high there. So still battling the zone for Bitcoin, all right? Just not able to get back above the zone like we wanted to. And now I had the old falling wedge with the head in the side of the middle. I've seen this pattern so many times in my life. It's absolutely insane how many times they replicate. Small, big, little time frames. It does not matter. I see the same stuff over and over again. Still a beautiful cup and handle that could get a big move to the upside. Let's take a look at the ES1. And S&P futures just getting a massive dump to the downside after having such a nice run the last few days. S&P getting sold off. It's just weird. Like, why are you getting sold off if they don't raise rate? I'm so confused right now. Like, they thought they were going to lower the rate. You know what I mean? Like, everyone knew they weren't going to lower the rate. Why does this create a sell-off in the S&P? I really don't understand. Like, I'm confused. Dollar gets stronger when they don't raise rates, right? Dollar getting a massive pump to the upside. Are they just trying to lure us in? So, I'll be honest, I'm confused as everybody else. It doesn't make sense. But that's why I usually don't trade these days, because they never really make sense. It's just whoever's long or short, they go after them, and then they figure it out after that. Dump, then pump. People expecting pump, so dump. Rigged. This is manipulation. Feeling like a trap. Yeah, basically, so the next time we see that it's obviously going to move up because of the rate, but if they raised the rate, we would have dumped anyway, which is so strange. You know what I mean? They wouldn't have pumped if we raised the rates. This just doesn't make any sense at all. Pretty crazy, if you ask me. Like, pretty strange. And again, that's when you feel manipulated. You feel like you're in a wave pool just getting sloshed around by the whales. I believe it's because of the 2 hikes coming this year. Rug pull on the stock market. How do we know there's going to be 2 hikes coming this year? Who knows that? Who said that? Where does that come from? We look at the CME watch tool, and we do head over to July, and now we have a 71% chance they will raise the rate. So they're actually betting the opposite way now. And we said that because the Bank of, we saw the Canadian bank raise rates and Euro raise banks. That made me think that the U.S. would probably follow in tow and do the same thing. So far it is. Confusing price action. But he could change his mind. Show me the charts, and I'll show you the news. At the end of the day, we were in a symmetrical triangle. In my mind, they're 50-50 patterns, but most of the time they do break to the downside. That is what it is. I did play it long right there, and I probably got stopped out by now at that. Let me just take a look, but I should have been stopped out of the trade. No, I'm still in there down $43. I'm hanging out on a ledge there. I'm a little lower than the futures show me. So, but I'm pretty close. They got really close to stopping me out. The fact that I didn't get stopped out is pretty insane. But we'll see. We will see. Can we get that bounce back to the upside? Now, I mean, they ruined the beautiful trend that we had going on, too. We'd have to bounce back inside and then get a move to the upside, or maybe change it to a falling wedge. We'll see. CNBC front page says 2 more hikes this year. But, like, how do they know? Like, what makes them say that that's guaranteed to happen? You know what I mean? Nobody knows exactly what's going to happen, but I guess they do, right? It's an inside query. Tighten up that stop loss. That was planned. Nobody knows. CNBC front page. Pump the dollar. Yes, could have this for the first pause, so the language they use should be aggressive. And actually, it could get worse. I mean, if it is aggressive, then he's going to come out and talk some nonsense, right? It looks like he's going to come out and just run, say the whatevers, right? So we're here about 11 more minutes till the Fed rate hike starts to pop on in, and we'll keep you guys situated. We'll do what we do always with the hike in the middle. We'll keep the second chart on the side, and we'll be watching price action and the BOOKMAP and just watching the liquidations and the movements in the market as he speaks. It's going to be a fun ride. Let's see what happens. Is he dovish, bearish? What is he going to say? How is he going to say it? And we'll be ready for you like we are every single Fed meeting, keeping you in store for what's going down and just kind of breaking it down for you. So I did take a shot. One thing I never do, breaking all my rules, man. Never trade on Fed day. Thought for sure we would have at least get some type of pump to the upside, but we did not get the pump, right? Watch what will happen after his speech. They don't want the markets to go up. Cas will come down a bit. A lot of bearish divs, but that's okay. They want everyone to lose. Stay strong, friends. Amen. Amen. We need to decode his message. Sammy, dot plot says 2 more hikes, brother. Interesting. What is a dot plot? I don't know where you get that up. Tighten up that stop loss. Nobody knows. We back, baby. We back. Shout out to all the lovers of life. Shout out to all the crypto lifers out there. God bless each and every one of you for being here. Have a little more water. It's hard to stream. I also just did an interview with Crypto Lifestyle, which is going to be out tonight. A lot of content for you guys. We're creating as much content as we can every single day on the channel. Crazy. My dad dies. They slaughter crypto. Things don't go right. You know, you got people who are just can't handle the pain anymore. It's been a tough month, I'll be honest. And it's beautiful outside, and all you want to do is be outside and being away from the charts, especially if you're in your upper Northeast, right? But you got to keep on grinding. It does not stop. Market's already dumping. The insiders are feeding on the plebes. Yep. My long-term bag is already bleeding. They can't make me lose more as long as I don't sell. Amen. Amen. Looks like that's vodka. I know, right? But it is just water. It's just water with lemon in it. I'll tell you what, though, it's been difficult for sure. It's been tough, and it hasn't been easy. Can this cup and handle break out? Can we get this double bottom, this bigger double bottom now, back to the upside? 25,855 ain't too bad, considering. Am I still hanging on by a thread inside this futures trade, or did they get me? They did not get me. My stop loss is sitting at 25,718. So we will see what happens, and they went as low as 25,746. I got very close to being stopped out. Bless you and Jimmy. God bless you. Thank you so much for the love, man. We usually don't do music on Fed Day. You know what I mean? Because he's going to be talking. You can't have your music on while he's talking, so it's rather get you kind of ready for talking heads. You know what I mean? So we don't do music on Fed stream. That's for the fun crypto lifer stream. All right, but we're having a guest here, Jer Powell, and he's going to be taking over. So we're not going to be seeing you're not going to be hearing the music this time. I don't know why this doesn't just say 100% right now. Pretty funny, right? June 14th, 96. Like, why doesn't this just say rate hike is in? I find this really strange. They should just call it like hike 100% done, call it a day, right, on the CME watch tool. It does say we're going to get a rate hike here, and both months suggest 525 to 550 in September, 525 to 550, 69%. Once that get raised, we'll see. November, they're projecting. December, still everyone says the same will be the same. Who knows? We don't know for sure. Another bank collapses, things could change, but we'll see what goes on. We got the 5-second chart ready for you. All right, we're going to have it up here on the right side. We're going to have BOOKMAP ready for you. We're going to have there on the left side, and we're going to watch as what he says and see how dovish or hawkish he is, and then we're going to go from there to kind of give you this information. So get ready. It's going to be in about 7 minutes when Jerome Powell decides to open his mouth, and we're going to give you more information than any stream that I watch. I used to watch the Fed streams on other channels. I found that I wanted to give you more information than I saw on those streams. I love everyone's stream, but I wanted to give you more. I wanted you to understand kind of what was happening, what was going down. One thing I want to think is, like, can I make this smaller? You know what I mean? Takes up so much of the screen. I would like it to take up less of the screen, the sidebar there, right? Sometimes you can do that. You can change the sidebar, whatever. We can still see what's happening with the numbers in the Fed movement. That's all we want to see is like the regular idea. 25,860, I wouldn't be surprised if we ended up back where we were later on today and we continued the pump to the upside, and they just tried to get whoever was kind of a little too overzealous with their leverage in and out of the trades. You know what I mean? That's just kind of what we're seeing. So only time will tell, but we will keep you posted, and we'll keep it moving. Raise it and get over with it already, Chair Powell, right? Jay Bella, it's official, right? They paused. It is official. They did pause. Fed rates were paused. Fed rates were paused. If you're new, just jump on in, and you want to get the news from me. The Fed rate was paused. So live Fed rate hike and Bitcoin action, or not hike, I guess is what we want to call it. But Fed rate has been paused. Shout out to the chat revenue. Thank you for the $10 in super chats. Music. Bless you. And Jimmy, thank you so much for saying bless me and my father. That's so nice. Appreciate you, Sam. Thanks for keeping us vigilant. God bless Crypto Bellico, man. Thank you so much for jumping on in. And Bellico is like war, right? That's like I remember that being like I believe an Irish word for war. I mean a Latin word for war. Bellico, bellicare. So what I do is I just keep you kind of showing you these smaller time frame ideas, and now we're forming like a symmetrical triangle, right? That's just another kind of bear flaggy because it has that like slant to it, not as symmetrical as we could have wanted. And, this is the next issue that we're seeing here, right? Now we're going to go up or down either way. This is 50-50 shot. More likely we do go down, based on the technical analysis. Just because we hit a previous high and weren't able to get back above it, you now have a lower high. You expect to put in a lower low out of this move. So now we're watching the 5-second chart. Once he opens up, we'll see what happens. They are kind of battling back and forth. I don't think enough people want to jump in now. So you're kind of getting some scared feet here. A lot of people want to wait for the meeting hike. Didn't go as planned, so more people would have jumped in or jumped out depending. And now they're kind of sitting there like, what do we do? But signals for the further increases ahead. DGen, they pause for a month. We'll start back raising rates next month, most likely. We don't know, though. What if a bank collapses, right? And again, I said that we're going to pause rates because they're filling up the TGA account. When they fill up the TGA account, they pause rates. That's just kind of something that you see happen a lot. So because they're taking money out of the system as they speak when they fill up that account with $1 trillion, right? So anyone new jumping in, they did pause the rates. They did pause the rates. They did pause the rates. We have the Fed meeting coming for you at 2:30. It'll be live right here on the channel. I can't wait to bring it to you. Get ready. Get situated. Get yourself a nice little seat. Get yourself a nice little drink. And get ready to hear Jerome Powell dance around all these different people's ideas and words. What's up, Lifer? Sam, shout out to Tyler Buckles. Shout out to Francisco Bravo. Shout out to Tyler Buckles again. Shout out to Jimmy Bitcoin. Anything is possible. Just shorted from 26,075 times 77. $100, small scap, based on the news. DJ, they want to pause for a month. I love you. I love you, man. Shout out to Andrew Miller. I love you too, man. Thank you so much for the love. I meant to pause doesn't mean we get some magic moonshine all of a sudden. I know. I got the food for the FOMC Powell speech. Amen. Shout out to Crypto's creator, Crypto Man. Moonshot. we'll see what happens. We'll stay tuned. We want to see this break up. Now we have a resistance here that has to be broken and a resistance here. These two levels need to be kicked back out. Let me actually make them Alt-J's so we can read the actual reading on them. And so we're looking for these two ideas here. We got to get back above 25,874. We got to get back above 25,922. These are going to be two areas that we are roughly having a bit of an issue with. Still cup and handling slightly on the smaller time frame as we have this nice cup with this handle. It does suggest we could get a break to the upside, but only time will tell. It doesn't mean we're guaranteed to pump. But that is a cup and handle inside of symmetrical. We got to get back above the zone to remain bullish. We're fighting here on the 5-second chart. 3 minutes to countdown, and Jer Powell is going to be coming, hitting us with that move. Adam and Eve double pattern. It is an Adam and Eve, too. I like that you just said that because I was like so focused on the cup and handle. You got this Adam and Eve, and a lot of times the Adam and Eve does make a little flag to the side. It's a slanted Adam and Eve to the upside. Could we get the move out of the symmetrical? And we're going to keep this kind of drawn for you and keep things moving in the direction. One of the few channels to actually do the 5-second chart for you while you're paying attention, hanging out, looking at what's happening. We're going to have this on the right side. I'm going to be doing live TA while he talks. So I'm going to be privy. I might be changing the, what I do is I keep this on another screen up here, which is connected to the one that you see here. It's kind of cool. So like say I were to take this line away up in here, right? You're going to see it react to this side. See, I don't have to draw on here because it's small. I'll have my big screen up here to draw on, but it will react the same way. Like if I move this white line, it's like magic. The white line is going to move. It's pretty cool, right? I figured that out the other day. It was pretty fun. Dollar index also forming this kind of bullish flag here. And every time the dollar index keeps pushing up, it's going to affect the price action of Bitcoin, right? And so how this helps the dollar when they don't raise the rates, I guess it makes borrowing more enticing. So people might want to borrow more USD, which actually could create a little more enticement throughout the regular markets. 1 minute to countdown, 1 minute to countdown. And I don't know how we got through those quick 20 minutes. They go by like this when you're streaming. Only time will tell. Shout out to all the beautiful people on the live. Thank you for jumping on in and appreciate each and every one of you for being here. And it's just been an amazing day to be alive. And it's been an amazing journey every single day here on the live stream and with each and every one of you. So thank you for everything you've given me. I appreciate it. It's been an amazing run since I started live streaming in 2021. It's been 2.5 straight years of just absolute loveliness. No complaints, really, just blessings and gratitude to each and every one of you for who shows up, who shows your support, and who is here every single day on the channel. Hope you're having a wonderful day with you and your family. If your kids are out of school already, my kids are. A lot of people are about to have their kids out, and here we are with the Fed rate hike about to start. Get excited, get ready. This is it. This is it. And it's only a matter of time now until we hear Jer Powell on the mic. So get ready for that. I'll do some commentary as I can. Sometimes people say, shut up, lifer, we don't want to hear you. I get that. Because, they want to see what Jer Powell is saying. And we know all the journalists. They ask the same journalists, they let the same journalists, and never any new people here. And so we always have, this is how we have it. We have BOOKMAP on the right side showing liquidity. Now we're getting that pump back to the upside here on the smaller time frame. That cup and handle is starting to break. We broke that previous resistance. That's a good sign. And here he comes, Mr. Jerry Powell on the screen. Jer Powell! Sorry. I just had to. Jer Powell.
Good afternoon.
Good afternoon.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal.
Never going to happen, I'm telling you right now.
Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace.
They're dumping
We've covered
securities.
a lot of ground,
Isn't that
and
funny?
the full effects of our tightening have yet to be
Why
felt.
were they buying securities in the first place? So
In light
insane.
of how far we've come in tightening
And
policy,
whose stocks were they getting to buy?
the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Dumping on the
Looking ahead,
market.
nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time. And I will have more to say about monetary policy
not good.
after
That's
briefly
not what we wanna hear.
reviewing economic developments.
Not what we want to hear at all.
The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector
People can't buy a
remains
thing.
weak,
What is he talking
largely
about?
reflecting higher mortgage rates.
They can't
Higher
afford it.
interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer-run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal.
Never going to happen.
Over the 12 months ending in
Never
April,
going to
total
happen.
PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of
It's
getting
more expensive for things a year ago,
and
it's going to be more expensive next
has a
year.
long way to go.
Let's get real.
The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation
Getting back
to
above
our 2%
900.
objective.
There we go.
As I noted earlier, since early last year,
We broke out.
we've raised our policy rate by 5 percentage points.
This is a 5-second chart.
We have been seeing the effects of our policy tightening on demand in the most interest
There we go.
rate sensitive
Leverage
sectors
trade
of
back
the
in action.
economy, especially
I
housing.
didn't
and
get stopped
investment.
out, baby. Let's
It will
see.
take time, however, for
Let's
the
see.
full
We get back
effects of
inside that
monetary
triangle on the
restraint
bigger
to
time
be
frame.
realized,
We can get a move.
especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity.
What's
hiring,
interesting
and
is
inflation.
had you just traded this cup and
The
handle,
extent of these effects remains uncertain.
my old school way to trade, you would have gotten paid. Look at this.
In light of how far we've come, in
Sammy,
tightening
cup and
policy,
handy to the target.
the
Look at
uncertain
that.
lags with which
Bang,
monetary policy affects
bang,
the economy,
bang.
and potential headwinds from credit
Pretty
tightening
interesting.
The committee decided at today's meeting to maintain the target range for the federal funds rate
Ooh.
at 5 to 5.25%.
Look at BOOKMAP.
And to continue the process of significantly reducing our securities holdings.
Why do they hold
As I noted
securities? Why do
earlier,
they get to hold securities?
Nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional
No, they held the target rate
information
steady
and
because the
its
TGA was
implications
filling
for
money up.
monetary policy.
That was it. That was why.
In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee
doesn't even
will
know how to
take
tie
into
a tie
account the
right. His
cumulative
tie's whack.
tightening of monetary policy,
gotta
the
keep it
lags
clean,
with which
man.
monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a half percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Wow, that was it, huh? Colby. She's that girl with the black hair.
Thank you. Colby Smith with the Financial Times.
Colby.
I'm curious what gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were three issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly. By historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
So there was no kind of initial debate about the possibility of July, any sense of the initial support at this stage for that move?
So again, we didn't make a decision about July. I mean, of course, it came up in the meeting from time to time, but really the focus was on what to do today. I would say about July, two things. One, decision hasn't been made. Two, I do expect that it will be a live meeting.
Thanks, Howard Schneider with Reuters. I was just wondering if you could help us understand the narrative here, because it feels like there's been a level shift in the dots. Stronger GDP, less of a hit to unemployment, slower progress on inflation, and I'm wondering, in this, sort of, where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like. It's not coming from there. Demand's not coming down all that fast, according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit. Inflation estimates moved up a bit. And, all three of those kind of point in the same direction, which is, that perhaps more restraint will be necessary than we had thought at the last meeting. So, although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time. And I think you go back to the three-part framework for core PCE inflation, which is, we think, as good an indicator as you can have for inflation.
Target back to 26K.
You start with goods. With goods,
so they liquidated the shorts nastily.
Healing and supply conditions, supply side conditions. They've definitely improved a substantial amount, but if you talk to people in business, they
look at the volatility,
though;
it's out of control.
So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels, and it's really a matter of time as that goes through the pipeline. In fact, I think any forecast that people are making right now about inflation coming down this year will contain a big dose of this year and next year will contain a good amount of disinflation from that source, and that's, again, probably going to come slower than we would expect. That leaves, the big sector, which is a little more than half, pardon me, of the core PCE inflation. That's non-housing services, and we see only the earliest signs of disinflation there. It's a sector, it's a very broad and diverse sector. I would say in a number of the parts of that sector, the largest cost would be wage costs. It's the service sector, so it's heavily labor intensive, and I think many analysts would say that the key to getting inflation down there is to have a continuing loosening in labor market conditions, which we have seen. We have actually seen, I go through a number of indicators suggesting there's been some loosening in labor market conditions. We need to see that continue. I would almost say that the conditions that we need to see in place to get inflation down are coming into place, and that would be growth meaningfully below trend. It would be a labor market that's loosening. It would be goods pipelines getting healthier and healthier and that kind of thing. The things are in place that we need to see, but the process of that
we hit the target of this
inflation
little,
is going to
got
take
really
some
close
time.
to the target. See, just trading these little patterns.
Nick.
It's another nice little gain there if you traded futures right there. Right? It got rejected though.
Nick Tamaros of the Wall Street Journal.
Sure, Paul.
Chair Powell, what's the value in pausing and signaling future hikes versus
the exact length of the base of
just
the
hiking
triangle.
now? I mean, not to be flippant, but I don't lose weight just by buying a gym membership. I have to actually go to the gym. 16 of your colleagues put down a higher year-end 23 rate today. A majority of you think you're going to have to go up by 50 basis points this year. So why not just rip off the Band-Aid and raise rates today?
So first, I would say that the question of speed is a separate question from the question from that of level. Okay, so And I think if you look at the SEP, that is our estimate, our individual.
can consolidate
it's really
like this.
accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of speed, it's what I said at the beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting, it's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward, and we'll get to see
Nasty price action.
You know, we don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right, and this is if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
I know you said July is live. With only one June employment, with only the June employment and the CPI report for June due to be released before the July meeting, you get the ECI after, you get the senior loan officer survey after, you get some bank earnings at the end of next month. What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or a longer pause?
Well, I think you're adding that to the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting, it'll really be a 3-month period of data that we can look at. And I think that's a full quarter, and I think you can draw more conclusions from that than you come from any 6-week period. We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the financial sector. We'll look at all the data, the evolving outlook, and we'll make a decision.
Gina.
Thanks for taking our questions. Gina Smiley, New York Times.
Smiley!
You obviously in your forecast marked up
Just gotta do that stuff.
sort of path for growth,
Smiley.
marked down the
Smiley.
path for unemployment, marked up the path for inflation pretty notably. I wonder, since March, what has changed to make you think that the economy is a lot more resilient and inflation is going to be a lot more stubborn? And given that, why do you feel confident that this is as high as you're going to have to revise the federal funds rate, or do you think it's possible we could have even a higher than 5.6% terminal by the end of this cycle?
I mean, on the
What
first
cycle?
part, I just think we're following the data and also the outlook. The economy the labor market, I think, has surprised many, if not all,
Ooh, I just
analysts
saw
over the
something new
last couple
here.
of years with its extraordinary resilience, really. It's just remarkable, and that's really, if you think about it, that's what's driving. It's job creation, it's wages moving up, it's supporting spending, which in turn
That's
is
a
supporting
complex head and
hiring.
shoulder right
It's really
there.
the engine, it seems, that is driving the economy. So it's really the data. In terms of, we always write down at these meetings what we think the appropriate terminal rate
Nobody
will be
cares
at the
what you
end of this
think.
year. That's how we do it. It's based on our own individual assessments of what the most likely path of the economy is. It can actually, in reality, wind up being lower or higher. And there's really no way to know. But it's what people think as of today. And as the data come in, it can move around during the intermeeting period. It could wind up back in the same place. But it really will be data driven. I can't tell you that I ever have a lot of confidence that we can see where the federal funds rate will be that far in advance.
Mr. Chairman, thanks for taking my question. You had said back at the end of May that you thought risks were getting closer to being into balance. Is that still the case, or has your mind changed about the balance of risks out there? And also, could you give us an idea of what would be a sufficiently restrictive funds rate? Obviously, the current rate, according to the committee, is not sufficiently restrictive. Is it 5.6? Is it 6 years, or sufficiently restrictive? Thank you.
I would say again that I think that over time, the balance of risks, as we've moved from from interest rates at effectively 0 now to 5 percentage points with an SEP calling for additional hikes, I think we've moved much closer to our destination, which is that sufficiently restrictive rate. And I think that means, almost by definition, that the risks of sort of overdoing it and underdoing it are getting closer to being in balance. I still think, and my colleagues agree, that the risks to inflation are to the upside still. So we don't think we're there with inflation yet, because we're just looking at the data. If you look at the full range of inflation data, particularly the core data, you just aren't seeing a lot of progress over the last year. Headline, of course, inflation has come down materially, but as you know, we look at core as a better indicator of where inflation overall is going. So I think what we'd like to see is credible evidence that inflation is topping out and then beginning to come down. That's what we want to see. Of course, that's what we want to see. And I think it's also, we understand that there are lags, but remember that it's more than a year since financial conditions began tightening. I think the reason we're comfortable pausing is that we are still, much of the tightening took place over last summer and later into the year, and I think it's reasonable to think that some of that may come into effect. So we're, I think stretching out into a more moderate pace is appropriate to allow you to make that judgment of sufficiency, with more data over time.
I mean,
Rachel.
there's nothing, man. Not saying anything.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I wanted to ask further on the lag effects. When you're considering when you would hike again throughout the course of the year, are there things that you would expect to kick in as those lag effects come into effect that would inform your decisions? Have you learned things over the past year that give you some sense of timeline for when to expect those lags to come into effect?
Yeah. So it's a challenging thing in economics. It's sort of standard thinking that monetary policy affects economic activity with long and variable lags. Of course, these days, financial conditions begin to tighten well in advance of actual rate hikes. So if you look back when we were lifting off, we started talking about lifting off. By the time we had lifted off,
Lifting off what, your
which is a
shirt or
pretty
your
good
jacket?
estimate of where policy is going, had gone from 20 basis points to 200 basis points. So in that sense, tightening happens much sooner than it used to in a world where news was in newspapers and not on the wire. So that's different, but it's still the case that what you see is interest-sensitive spending is affected very, very quickly. So housing and durable goods and things like that. But broader demand and spending and asset values and things like that, they just take longer. And you can pretty much find research to support whatever answer you would like on that. So there's not any certainty or
Let's get the likes up to the watch,
in the
please.
profession
Thank you.
on how long it takes.
Hit that like button if you can.
So, and that makes it challenging, of course. So we're looking at the calendar, we're looking at what's happening in the economy, we're having to make these judgments. And again, it's one of the main reasons why it makes sense to go at a slightly more moderate pace now as we seek that ultimate, I can't point to that ultimate endpoint.
He didn't even
I can't
finish
point
his
to a
statement,
specific data point. I think we'll see it when we see inflation, really, really flattening out reliably and then starting to soften. I think we'll know that it's working. And ideally, by taking a little more time, we won't go well past the level where we need to go.
I was curious if you could give us an update on what you're seeing on credit tightening since the bank incidents from March and how you're teasing that out apart from these lag effects.
So it's too early still to try to assess the full extent of what that might mean. And that's something we're going to be watching, of course. And if we were to see what we would view as significant tightening beyond what would normally be expected because of this channel, then we would factor that into account in making rate decisions. So that's how we think about it.
Let's go to Chris.
Thanks. Chris Rugaber at Associated Press. You mentioned that many of the trends are in place that you want to see. Core services ex-housing has come in pretty low in the past couple of months. And as you noted, a significant portion of core inflation is now housing prices. And then we've had some quirks in used car prices. So given that these trends are in place, I guess I'm sort of asking the flip side of Nick's question, why signal additional rate hikes? Aren't things headed in the direction you need? Why not simply give it even more time or It's surprising to see so much hawkishness in the dots, given what we're seeing recently.
Yeah, so, we've, remember, we've,
He's like, my count's down now,
We're-
you bet.
2.5 years into this, or two and a
I just
quarter
made a
years into
stock
this,
buy.
and forecasters, including Fed forecasters, have consistently thought that inflation was about to turn down, and traditionally, typically forecasted that it would, and been wrong. So I think if you look at core PCE inflation
I think.
look at it over the last 6 months, you're just not seeing a lot of progress.
you think
It's running, and
ain't
it's
the
running at a
real deal,
level,
brother.
over 4.5%, far above our target, and not really, moving down. We want to see it moving down decisively. That's all. Of course, we are going to get inflation down to 2% over time.
No, you're not.
We don't want to do.
You
we
will
wanna do that
not.
with the minimum damage we
You
can to
will
the economy, of course.
not.
But we have to get inflation down to 2%, and we will. And we just don't see that yet.
Definitely
So,
not. Why do you have to get to
hence you see
2%?
today's policy decision,
Why? Why
both-
does it
both
have to be?
Write down
I don't
for
get
the
it.
rate hikes by the end of this year.
Because that's
but
what you
also
said, and you want to stick to what you
know,
said?
to take, to moderate somewhat the pace.
They will
with which
never
we're
get to
moving.
2%. Mark my words, I will run for president 2032. They will never get there.
Quick follow-up. The last press conference,
He's like, I ain't
you
giving this
mentioned you
mic
didn't
up.
see wages driving
This is my
inflation.
mic.
And, there was some research from the San Francisco Fed suggesting wages aren't necessarily a key driver. But you've talked about the labor market today and the need for softening. Can you give us a little more specifically of how you see the tight labor market driving inflation at this point? Thank you.
Right, so I'm not going to comment on any particular paper, but I would say that I think the overall picture is that at the beginning, in early 2021, inflation was really coming from very strong demand largely for goods. People were still at home. They had money in the bank. and they wanted to
25,900
spend.
holding.
They spent a lot on goods, and of course, at the same time, and because of that high demand to some extent, supply chains got all snarled up. So prices went way up, inflation went way up. So that was the origin, and it wasn't really particularly about the labor market or wages. But as you moved through 21 into 22 and now in 23, I think many analysts believe that it will be an important part of getting inflation down, especially in the non-housing services sector, to getting wage inflation back to a level that is sustainable, that is consistent with 2% inflation. We actually have seen wages broadly move down, but just at a quite gradual pace. So, and that's a little bit of the finding of the Bernanke paper with Blanchard of a few weeks ago, which is very consistent with what I would think.
Go to Michael McKee.
Michael McKee from Bloomberg Radio and Television. You said in the past that you don't like to
Mikey
surprise
McKee.
markets. It's kind of been the Fed's view. Markets should have an idea of what you're going to do before you go in. You also said a number of times that it would take a while to bring inflation down. You reiterated that again today, and that we would get to a point where inflation could be sticky. So I'm wondering, as we go into the next meetings, how Wall Street or others should look at your reaction function. What will you be reacting to, time or data? In other words, if nothing much changes, if we're looking at the same sort of labor market, the same sort of inflation levels in July or in September or November, will you move because you've said you feel you need to? Is it time that's going to require additional movement, or would it be a reversal in inflation?
So I don't want to deal with hypotheticals about do
But that's all you do say.
So we of course we don't go out of our way to surprise markets or the public.
Oh, please.
At the same time, our main focus has to be on
exactly
getting the
what you
policy
do.
right, and that's what we're doing here, and that's what we'll do for the upcoming meetings.
policy
I will
is
say
just a funny
the
word.
July
I have
meeting
no
will be
idea.
live, and we'll just have to see. I think you'll see the data, you'll hear Fed people talking about it, and markets will have to make a judgment.
Well, do you think inflation is likely to continue coming down based on the lags and based on your threat of additional movement? Or are we going to be in a period where we're not going to know what's happening?
I think if you look at, if you just look at, I'll just point you to the forecast. So inflation is running, core PCE inflation is running at about 4.5%, a little higher than 4.5%, and the median FOMC participant thinks it'll go down to 3.9 on a 12-month basis. This is by the end of this year. So that's expecting pretty substantial progress. That's a pretty significant decline for half a year. So that's the forecast.
I thought you might want to see his hair.
You know, we do try to be transparent in our reaction function. We're committed to getting inflation down, and that's the number one thing. So that's how I think about it.
He didn't answer the question at all, like at all. Like, it is just crazy.
Victoria Guido with Politico. Could you talk about
He's good
the
at it.
balance sheet and how you're thinking about it? What are you looking for to judge whether we're
Vicky
approaching
Guida.
reserve scarcity, and is Treasury issuance going to affect that? Also, are you considering lowering the RRP rate in order to take some pressure off banks?
So let me say, first of all,
She's
on
like,
the Treasury
I hit you
part
with
of
the
it, I can
RRP.
talk about that, and then go back to the balance sheet. So on that, of course, we've been very focused on that for a couple of months, as everyone has. Treasury has laid out its borrowing plans publicly. I think I saw the Secretary's comments yesterday to the effect that Treasury has consulted widely with market participants about how to avoid market disruption, and that they're going to watch carefully for that. So that's from the Treasury, which actually sets the borrowings. At the Fed, we'll be monitoring market conditions carefully as the Treasury refills the TGA. The adjustment process is very
told you
likely
about that
to involve
TGA.
both a reduction in the RRP facility and also in reserves.
It's the only reason they
It's really hard
pause
to say
rates,
at
because the
At the
TGA.
beginning of this,
That's it.
which will be greater. We are starting at a very high level of reserves and still elevated RRP.
Just raise the debt ceiling, man. You're gonna have to print more money, baby.
Reserves are likely to become
What's going to happen when you print more?
scarce in the near term or even over the course of the year.
25.9 holding.
So that's the Treasury part of the answer. We will, of course, continue to monitor conditions in money markets, and we're prepared to make adjustments to make sure that monetary policy transmission works. Was there another part of your question?
To show you the big picture, we had a gap here. We lose this level, we're
Are
likely
you
to go to the value area low.
considering lowering the RRP rate to help take some pressure off banks?
25.393.
So we have a number of, I would say, the RRP doesn't look like it's pulling money out of the banking system. It's actually been shrinking here lately. So I don't think, that's not something we've thought about a lot over time. It doesn't really look like that's something we would do. I think it's a tool that we have. If we want to use it, we can. There are other tools we can use to address money market issues, but I wouldn't say that that's something that's likely that we would do in the near term.
Liar.
Janelle Marte with Bloomberg.
Bloomberg,
have
Janelle.
you seen sufficient cooling in the housing market to bring inflation down? For example, how does the recent rebound affect your forecast, and how does it factor into monetary policy?
It's just,
So
the looks are
certainly housing,
hilarious. Answer the question.
very interest sensitive, and it's the first place really, or one of the first places that's either helped by low rates or that is held back by higher rates, and we certainly saw that over the course of the last year. We now see housing putting in a bottom and maybe even moving up a little bit. We're watching that.
He just called a
situation
bottom in the
carefully.
real
I do
estate
think,
market. Running.
We will see rents and house prices filtering into housing services inflation, and I don't see them coming up quickly. I do see them kind of wandering around at a relatively low level now, and that's appropriate.
Do you think you'll have to target that with further rate increases?
Well, I think we look at everything. We don't just look at housing. The way it works is individual participants sit in their offices all over the country, and they write down their forecast, and including
Finally
their
got a
most likely
short squeeze
forecast,
there on the
including
market.
rate
Took a
forecast,
while.
and then they send it in on Friday afternoon, and we accumulate it, and then we publish it for you. So that's how they do that. Well, I don't know that housing is itself going to be driving the rates picture, but it's part of it.
Let's go to Edward.
Thank you for taking the question.
I'm staying
Mr.
long,
Chairman,
baby.
Edward Lawrence with Fox Business. So I want to go back to comments you made about, in the past, about unsustainable fiscal path. The CBO
Eddie.
projects the federal deficit to be $2.8 trillion in 10 years. The CBO also
Eddie
says
Law.
that federal debt will be $52 trillion by 2033. At what point do you talk more firmly with lawmakers about fiscal responsibility? Because I'm assuming monetary policy cannot handle alone the inflation or keep that inflation in check with the higher level of spending.
I don't
Oh.
do that. That's really not my job. We hope and expect that other policymakers will respect
They're never
our
going to
independence
do that.
on monetary policy.
That's never going to
And,
happen.
we don't see ourselves as the judges of appropriate fiscal policy. I will say, and many of my predecessors have said, that we are on an unsustainable fiscal path, and that needs to be addressed over time. But I think trying to
We've
get
been on
into,
that forever, man.
into that with lawmakers would be kind of inappropriate, given our independence
What a
and our need
mess.
to stick to our knitting.
What
Is
a
there any
mess.
conversation then about the Federal Reserve financing some of that debt that we're seeing come down the pike?
No, under no circumstances.
Courtney.
They will have to.
Thanks for taking our questions, Chair Powell. So looking at the SEP, it looks like GDP for this year was raised significantly, or
Brown.
forecast for GDP this year. The unemployment rate, meanwhile, was pulled downward. And so should we take that as a sign that the committee is more confident about the prospects of a soft landing, at least as it relates to what you were expecting in March?
You know, I would just say it this way. That I continue to think, and this really hasn't changed, that there is a path to getting inflation back down to 2%.
Never going to happen.
Without having to see the kind of sharp downturn and large losses of employment that we've seen in so many past instances. It's possible. In a way, a strong labor market that gradually cools could aid that along. It could aid that along. But I guess I want to come back to the main thing, which is, though, simply this. We see, the committee, as you can see from the SEP, the committee is completely unified in the need to get inflation down to 2%. And we'll do
Never going to happen.
whatever it takes to get it down to 2%.
Whatever it takes.
Over time. That is our plan. And
It's never going to happen if they keep printing money the way they're printing it. It's just
we
not going to
understand
happen.
that
It
allowing
doesn't make
inflation
sense.
to get entrenched in the U.S. economy is the thing that we cannot allow.
How does
to
he
happen
believe
for
himself?
the benefit of today's
don't get it.
workers and families and businesses, but also for the future. Getting price stability back and restored will benefit generations of people as long as it's sustained, and it really is the bedrock of the economy, and you should understand that that is our top priority.
Just a quick follow-up on
Printed
that.
20%
I'm just
of the
a little
money supply
confused
last
because you said
year.
the committee will do whatever it takes to get inflation down over time. But when I look at the SEP, inflation is still projected to be elevated next year, but the Fed funds rate is lower than where it is now. Can you help me understand that?
Sure.
Yeah.
So,
You're
if you
not making
look
any
2 and
sense,
3
buddy.
years out,
Even
with
by the
forecast, first
books,
of
you
all,
don't make no sense.
I wouldn't put too much weight on forecasts even 1 year out because they're so highly uncertain. But what they're showing is that as inflation comes down in the forecast, if you don't lower interest rates, then real rates are actually going up, right? So just to maintain a real rate, the nominal rate at that point 2 years out, let's say, should come down just to maintain real rates. And actually, since we're probably going to, we're having real rates that are going to have to be meaningfully positive and significantly so for us to get inflation down. That probably means that certainly means that it will be appropriate to cut rates at such time as inflation is coming down really significantly. And again, we're talking about a couple years out. I think, as anyone can see, not a single person on the committee wrote down a rate cut this year, nor do I think it is at all likely to be appropriate if you think about it. Inflation has not really moved down. It is not so far reacted much to our existing rate hikes, and so we're going to have to keep at it.
Like, doesn't make any sense.
Sorry, thank you.
It's going to hammer the markets.
Hi, Chapel.
Hammer everybody.
AFP News Agency. The May job report
Julie
showed a rebound
Chabanas.
in May in black workers' unemployment. Is it consistent with the Fed's maximum employment mandate? Are you worried about that, about this rebound?
So we are, of course, worried about.
Worry is a fake
there are
emotion acting
longstanding
real. It's part of fear.
differences in racial and ethnic
Shouldn't be
groups
used.
across our labor market. That's a factor that we can't really address with our tools, but we do consider that when we're thinking about what constitutes maximum employment. It is for us a broad and
Price action
inclusive
stabilizing at
goal.
25,960.
And so we do watch that. But remember, all unemployment, including black unemployment, has been bouncing around right near historic lows, historic modern lows here. So we're still talking about, I mean, what is as strong a labor market as we've seen in, a half century here in the United States. So overall unemployment of 3.7% is 0.3 higher than it was measured to be at the last a month ago, but still it's extraordinarily low. And so it's a very, very tight labor market.
Megan.
Thank you. I want to follow up first a little bit just on the rent question on housing. We heard Governor Waller talk about how, I'll back up, we haven't quite seen the slowdown in rents show up in CPI yet, and we did hear Governor Waller talk about how an uptick in housing might mean that there's not going to be as much relief coming, or a shorter
Maggie Casella.
bit of relief than we thought. Can you talk about how you're thinking about that and how that played into today's outcome?
I wouldn't say, so that's, as a factual matter, that's correct. We do need to see, rents bottom out here, or at least stay quite low in terms of their increases, because we want the.
How is rent going to stay low when people have to pay more for hot water heaters?
Rental.
People have to pay more to redo a. They're going to raise the rents, man. That's what they do every 5 years.
For the PCE, so it's important, and so it's something that we're watching very carefully. It's part of the overall picture. I wouldn't say it's the decisive part, but take a step back. What you see is look at core inflation over the past 6 months, year. You're just not seeing a lot of progress, not the kind of progress we want to see, and it's hard to avoid that. And
head and shoulders starting to break it down.
People in the committee, the median went up significantly, so that the median participant now thinks that core PCE inflation on a 12-month basis will be 3.9% this year. So once again, every year for the past 3 years, it's gone up over the course of the year, and that's doing that again. So we see that, and we see that inflation forecasts are coming in low again, and we see that tells us that we need to do more. And so that's why you see the SEP with where it is.
Could you also talk briefly about your outlook for wages, and given the recent slowdown in core services excluding housing, how far you think wages might need to fall in order to get inflation back in line?
So wages will continue to increase. So what we're talking about is having wage increases still at a very strong level, but at a level that's consistent with 2% inflation over time.
Not going to happen.
So I think we've seen
I'm going to run for president on this, and I'm going to tell you they were lying.
Of wages have,
and I have all the proof here for years and years and years.
Not extremely, but highly elevated levels.
I stay convinced.
A year or so ago, and they're moving back down, but quite gradually. And we would want to see that process continue gradually. Of course, it's great to see wage increases, particularly for people at the lower end of the income spectrum. But we want that as part of the process of getting inflation back down to 2%, which benefits everyone. I mean, inflation hurts those same people more than anyone else. People on a fixed income are hurt the worst and the fastest by high inflation.
Craig.
What about their pensions and money market accounts when you bury the stock market, though?
I just wondered if the committee has talked at all about the labor market, and there's strikes now in Hollywood, and now the United Auto Workers are talking about a possible strike. I mean, aren't workers, we have some workers have power now and are going to be seeking higher wages. Does that come up in your discussions? Thanks.
Wow, that's interesting.
So the topic of wages in the labor market and dynamics in the labor market is about as central a topic to our discussions as anything. I mean, it's very, labor economics, and the labor market are utterly central. It's half of our mandate. So we spend a lot of time talking about that. I think, there are structural issues that are really not for the Fed. And so we don't spend a lot of time, although we take notice of what's going on, but we're not involved in discussions or debates over strikes and things like that. But we look and we see what's going on, and we're making judgments about what it will take to get inflation down to 2% in the aggregate. And as I said,
we lost this point of control here. Likely to go to the volume area low. I could see 25,400 here.
About wages at the beginning. And it's becoming more about that as we get into really service sector inflation, which is the part of the economy where we have seen the least progress.
Let's go to Mark for the last question.
Still inside the pattern, though.
Thank you, Mr. Chairman. Mark Hamrick with Bankrate. Wondering what your thoughts are now about systemic risk now that we're about 3 months past the failure of Silicon Valley Bank, and also specifically, what are the risks associated with commercial real estate as well as non-bank financials, and could you further elevate those risks with higher still rates, possibly for longer?
Of course you can. You can make it harder for people to get into a business. They can't borrow the money. They can't get in.
I'll start with commercial real estate. We, of course, we're watching that situation very carefully. There's a substantial amount of commercial real estate in the banking system. A large part of it is in smaller banks. It's well distributed. To the extent it's well distributed, then the system could take losses. We do expect that there'll be losses, but there'll be banks that have concentrations, and those banks will experience larger losses. So we're well aware of that. We're monitoring it carefully. It feels like
what does it matter if you're aware of something? I saw the tsunami. I was aware of it.
As opposed to
still came and hit us.
Something that will suddenly hit and work its way into systemic risk. In terms of non-bank financials,
didn't answer the question.
Financial sector.
You can't even answer that.
There's been a ton of work, and clearly in the pandemic, it really was it was the non-bank financial sector where issues really arose, and there's a lot of work going on with the administration, in particular, leading that to try to address issues in the Treasury market and in all kinds of areas in the non-bank financial market. But our jurisdiction at the Fed is over banks, actually bank holding companies and some banks. So that's really our main focus.
Bank holding companies.
In terms of the events of March, as I mentioned earlier, we will be carefully monitoring that situation. Our job generally involves worrying about a lot of things.
Worrying
that may go wrong, and that would include
worrying is doing nothing
might be hard for me
worrying
to
is a
identify
waste of
something
time
that we don't worry about rather than that we do worry about. So we're watching those things very carefully, and as we see things unfold, as we see what's happening with credit conditions and also all the individual banks that are out there, we'll be able to take, to the extent it's appropriate, we can take, if there are macroeconomic implications, we can take that into account in our rate setting. And so I guess that's what I would say.
He didn't say anything, man. He said we're worried.
Do you risk
and we're
further
monitoring
exacerbating those issues if you get up to another 50 basis points?
So that's, and I guess I meant to address that by saying, as we watch, we'll see what's happening, and if we're seeing the kind of tightening of conditions that you could be referring to, then we can factor that, because really we use our rate tool it really has macroeconomic purposes, so we'll take that into account. Of course, we have responsibility for financial stability as well, and that also is a factor that we're always going to be considering. Thank you very much.
I'm out. That was horrible. And the market's just dismal. I'll do one little update, and then that's it. I mean, nasty. We live in a Ponzi scheme, everyone. We live in a Ponzi scheme. I don't know what else to tell you. Pretty sad, really. So at the end of these meetings, I always get pretty kind of like hit with the reality of what's really happening, and it just we're in a system where they're going to print money to zero. You know what I mean? And it is what it is. And they're going to put people in office just going to say what they need to say. But, like, we're never going to get the facts. And and even he doesn't know how to handle the situation, because nobody can. You can't force someone to stop an avalanche when they have a shovel, right? Like, that's kind of what they're trying to do. I do see the shoulder, head, shoulder on the 10-minute. And that's a complex head and shoulder. That's likely to break to the downside, the length of the head to the neckline, and then continue to dump here. The measured move is also the same measured move as like the symmetrical triangle with the base, and that puts us further down to about 25,181. So that's the probability right now. It doesn't mean it has to happen. The only way we can negate that is we break these two hills and we get back out of the zone to the upside, right? We need Bitcoin to break above here and get a retest of the area of about 26,040, 26,056. So my trade's still open. It's dangling on by a thread here. Down $38 right now, just sitting there doing nothing. Again, couldn't break. I even used 6x leverage on $1,000, just didn't go. You would have to use even higher leverage with smaller money or bigger money with same leverage to even get a push and pull here. Could have been trading the smaller time frames, but I wanted to focus on the stream, which is also a job as in and of itself. The bigger time frame that we're looking at here too is that we're making this symmetrical triangle. And, you know, we didn't breach this trend line, which was so important today that we got back above this. These are the two levels that had to be breached, 26,000 and 26,000, basically 26,070. Like, if we can get above that, I mean, it could get us a break out of this and stop the idea that this is a descending triangle with the flat bottom. I know I got a lot of drawings on here, so let me kind of open the, you know, just kind of identify this. That's a descending triangle, right? Clear as day. You're descending down and you're flat. That's likely to break us down right to this point here at 24,000. That would also be about that weekly support that I keep talking about, 24,300 to 24,004, and that's an area that we must continue to watch. So thank you so much for jumping in on the rate hike. I appreciate your time. And do I see any charts, anything kind of coming my way? I'll keep you focused. I have to take a break from the screen. I've been watching screens now since I did an interview right when my live stream ended at about 12:30. We got off at 1:30, and then I jumped right into this. My feet hurt from standing at my stand-up desk, no lie. My hand hurts from grabbing the mouse. My eyes hurt from staring at the screens. I'm going to have to take a break here, but I'll be back in an hour after I go for a walk, stay in some nature, and eat some food, and we'll see what happens. But right now, I mean, we're stuck. We're stuck in the zone that we were in. We left the smaller symmetrical triangle that I had planned that we were watching. That didn't play out. We dropped to the downside. We're inside this bigger symmetrical triangle here now. Just this one right here, and I'll even this out for you so you can see exactly what I'm talking about. Here's our top channel, okay, with the highlighter. Here's our bottom channel, and we need a bounce, and a retest of this area to get on out of this to the upside. I still remain long because my stop loss won't, you know, I won't hurt a lot if I get hit off. And these are just the levels that we're watching closer and closer every single day. Markets are tough to trade right now. People are kind of in a state of confusion. Every one of these meetings just leaves people kind of wondering even more. They don't seem to get their questions answered. No one seems to know what's really happening, and it doesn't really change what's going on. So if this symmetrical triangle can't break out and get Bitcoin to 26,000, 700 area, right? Into the 300. Sorry, my eyesight is blurry today, right? 26,360, 23. We really have to, first of all, we got to get back up these two hills, right? That's the first thing we got to do is 26,500 and then continue to the upside. We are getting a slowdown, and the 50-minute is very oversold. I would expect a bounce out of this to the upside. We almost have kind of a falling wedge there. You see this? As there's like a falling wedge in the zone that could break to the upside too as well. So watching this closely, but it's a symmetrical triangle, and we got to get back above these two previous zones. The way to trade this is if we get on out of it and we bullishly retest two of these areas here, that could be a nice move to the upside through this gap. If we come down and we barely retest, that could be a move to the value area lows. And the kind of area that I'm looking at is about 25,000, 500, and then even lower. So still could be some rooms for some gains today too if you play it right. But and that's kind of what symmetrical triangles give you. They give you that 50% probability, and you just have to wait for this area to kind of follow through. But we are getting tighter and tighter and tighter, telling me that a move is coming for Bitcoin, either down to 25,005 or up to 26,300. Preferably, we would like the 26.3. It would break this bigger channel that we're in, and it would negate the descending triangle that we keep watching every day. So let the dust settle. Let people kind of filter in this information. Let's see how many people got stopped out and locked out. We did see some liquidations, not as many as we would like. We look at BOOKMAP too again. We can see that we did have the short liquidations here. I mean, the long liquidations, only one or two short liquidations right there. One couple came in, but not a lot. We do see more liquidity to the upside, and this big order does want to be filled to 26.2, 26.4. We got these low laying fruit right there, but for the most part, we do see a move further to the upside. Thank you so much for whatever that was, a subscription or jumping on in. I appreciate it, and we appreciate you all for being here. So Bitcoin perp on KuCoin is neutral. True. Same talk with Jerome meetings. An atmosphere is so negative. Nice theater. Exactly. My motto, if it's not going up, it's going down. Amen. Yeah, it's funny, right? But everyone, thank you so much for jumping on in. Appreciate each and every one of you. I got to take a bit of a break from the screens. I'll be honest. I'd like to tell you I'm Superman and I can keep going all day long, but my knees hurt, my back hurts, and I got to take a break too. So shout out to everyone that stuck with me through these both streams. And look out tonight for my interview with the Crypto Lifestyle. Francis Dunn Uncensored. Dude, super smart. Got into ordinals before everybody else. I would highly check out that interview. I'm telling you right now, I don't put people out on my channel just to put them out. I seek and find the best talent, interesting people. So look out for them, and I appreciate each and every one of you for being here. May God bless you all, and thank you for your time, and thank you so much. Gratitude is my attitude. I appreciate you all for being here, and I'll see you on the next live stream.